Well, you may have noticed in the last couple of weeks that we're getting a lot more hot stocks. And the question is, when is it too late to buy them? When are stocks overbought? I'll answer that question, plus do my regular weekly market analysis of the stock markets, the currency markets, the crypto markets. We're going to look at the day trade of the week on CRON and do a market scan in search of a longer term trading opportunity, all coming up. So when is a stock overbought? We've seen a number of stocks this past week or two make these big gains, AMC being one, huge volume and really moving up very quickly. And the question is, when is it too late to buy? And there's a very simple way to answer that question. We want to avoid stocks that are overbought. And the characteristics of an overbought stock are when the price runs away from the linear upward trend line. I'm going to show you this on a chart in just a moment. So if you can draw a straight line across the bottoms for a stock that is moving up, you've defined the linear trend line. If price curves up and away from that linear trend line, then the trend is going parabolic. And at that point, it gets risky because almost all stocks that run away from their trend line with a parabolic trend will eventually pull back. So let's take a look at some examples, and we'll use AMC as the first example. I can draw a line across the bottoms there. That's the first linear trend line. And then I can draw another one here. That's the second. And notice that when price runs away from the trend, it eventually works its way back to it. And then it runs up very quickly, as it did on Thursday and Friday. And by the way, this is a 15-day, 15-minute chart. So it's showing how it's done over the last 15 days. It runs up and away in a curve, and then it starts to break down here and ultimately comes back to the trend line. So that's what we expect to happen. What you want to avoid are buying stocks when they are far above that trend line. So buying it here when you have all this distance down to the linear trend line is too late. When we had this trend line here, buying it up here when it's so far above that trend line was too late. Wait for them to pull back, build a period of low price volatility like this where it goes sideways, and then the breakout, that's when you can consider it again. Now we've pulled back. If we can build a base around this upward trend line, then we can maybe consider it again if it breaks higher. Now that's a short-term example. We can also look at a long-term example. Here is a 3-year weekly chart of Tesla. Here is the linear trend line. And you can see it starts to get steeper and steeper until it became a parabolic trend. So buying up in here when you are so far above that linear trend line is risky. And what ultimately happened? Price has fallen back to the linear trend line where it has bounced. And it's unbelievable how well this works. So just go look at some stocks that you know of that have been really hot, have done really well, and watch how they run away from their trend and then pull back to it. All right, let's get into this week's market analysis, starting off with the US markets. And here is the S&P 500. It made some decent gains this week. We sort of made a comeback from that weakness and uncertainty that we had 2 weeks ago. We're now almost at the old highs. We're just short of them. But what we've done here is repaired some of the damage that was here. Now, that damage never broke the daily upward trend line. So it wasn't critical damage, but it was very close to being so. And had we not held these lows, then there could have been a problem. Notice that the volatility is now compressing. So here we had lots of volatility, and now we're getting narrower volatility. That shows us that the buyers and sellers are feeling a little more confident. They aren't so worried about a crash, that sort of thing, and that is a good thing for the markets in general. Looking at the long-term chart, you can see that that long-term weekly upward trend is still in place, and so we are healthy there. Now let's take a look at the NASDAQ 100. It is not keeping up with the S&P 500. It has been trending sideways for a few months. It is building optimism. We have rising bottoms, and so if we could get a breakout through this, call it 342 level on the QQQ, we could resume the upward trend that began late last year, and that would improve trading action even more. And the Russell 2000, similar situation, the small cap stocks stuck in a sideways range. We call this a rectangle consolidation. You can see price just sort of bouncing around inside the rectangle. We need it to break out. That would be a positive. But if it breaks down, well, that would be a negative. For now, it's just hanging out. All right, on to the Canadian markets. And here is a daily chart of the TSX. And you can see, much like the S&P 500, it is moving higher, led this past week by strength in banks. Canadian banks doing very well. And you can see it's stable, not too much volatility, just moving higher, generally week by week. On the TSX Venture, which is our small cap or micro cap stocks in Canada, this trend went parabolic. It broke the parabolic trend, and then it actually came back to the linear trend and broke that as well. So that was damage. Well, now it's starting to build a nice base here, and if it can break up from the base, it may try to move up to those highs again. So these are the cannabis stocks, the junior mining stocks, those areas where people really speculate. It's getting better. It's not great yet, but it is trying. On to currencies, and here is the US dollar. I was, I wouldn't say bullish, but certainly not negative when it broke the downward trend. It failed to materialize into a reversal and a trend higher. Instead, we've come back and tested the lows. So the question is, will we hold those lows? Are we going to be able to hold off of this support and bounce, which is what it tried to do last week? If it can, great. But if we break down through here, we may be headed for lower prices for the US dollar. The Bitcoin market, I have been a bit of a bear on this for the last month and a half. Why? Again, trend went parabolic, broke the parabolic trend, then broke down from a pennant pattern right there, which was breaking this linear trend line. And now we're moving lower. I think Bitcoin can still go lower. Wouldn't surprise me at all if we get down to the $25 level on GBTC, which represents about $25,000 on Bitcoin. And you know what? It could very well fall all the way back to that $10 or $10,000 mark on GBTC. All right, looking at Ethereum, similar situation, parabolic trend. Worst time to buy is when you've run away from your trend line up in here so far above the trend line. It pulled back, but it failed to hold the trend line. That's a negative, and that indicates to me that this may go even lower down into this zone is about the next stop for Ethereum. Looking at commodities, gold continues to be strong. Not a lot of excitement though. Gold sort of grinds its way higher. Gold stocks sort of quietly move higher. There's not like a real lot of action. And I think a lot of that is due to the fact that it's moving up into all of this pessimism, into people that own at higher prices. And that is going to make it slower on the comeback trail. On the oil chart, building a nice pattern. This is the daily chart of oil, and this is an ascending triangle pattern. You can see volatility is compressing, and that means investors are building confidence. If we can break to the upside through that resistance zone, then oil should move higher, resuming the upward trend that started late last year. All right, and finally the fear chart. This is the implied volatility or the options volatility for the futures volatility for the S&P 500 futures, and it is at a low point. It is always moving down because of time value decay, but when we get these pops, sometimes you can trade it, and these pops are caused by fear of a correction. We had a little one a couple of weeks ago. It didn't materialize, just as all of these haven't materialized. Why? Because the long-term upward trend for the market has been intact for some time. So my ratings then, bullish long-term for both Canadian and US stocks. But on US stocks, I'm neutral short-term, just as the market stalling a little bit here. Gold is bullish on both time frames, as is oil. So while the pace of the upward trend has slowed for the indexes, there is an increased action in individual stocks. I think some of that heat coming out of the crypto markets is returning capital to speculate on individual stocks. And that is good if you like to trade the stock market. It's bad if you like to trade crypto. Gold is strong, but there is not a lot of excitement there. Oil is building that optimistic pattern, and it could continue its uptrend anytime if it can break out. And as I said, fear is low. All right, now we're going to look at the day trade of the week. This is just an example of a stock that we identify with the action candle indicator in the active live service at Stockscores. And if you want to learn more about that, just go to the Stockscores analysis tab on the Stockscores.com website, and you will see a little bit of information about what active live is all about. But essentially, we're looking for something called action candles. And on the chart here, action candles are all the pink dots. And so you can see a few of them. They occur anytime there is an abnormal price move with abnormal volume. What we're looking for are the action candles that surprise the market, that break from low volatility. And that's what happened right at the open on CRON, and it went into a nice upward trend. Now we see again how the linear trend line works. You can see price runs away from the linear trend, it comes back. It runs away, there it's parabolic, and it slowly gets back to it. It's such a reliable thing in the market. And what that means is you do not want to be a buyer up in these zones because that is just too risky. The economics of this trade were very good. For every $100 of risk that you want to take, required 1,660 shares. That was a little over $13,200 in capital. Of course, you can margin it because the stock is over $3. So you would have to put up $4,405 of capital. At the end of the day, this stock was up 17 and a half times its risk, which means for every $100 of risk, there was a $1,750 profit, which was a 40% return on capital for a trade that lasted basically all day on Friday. All right, well, now we'll jump into the Stockscores market scan tool in search of opportunities in the longer term vein. And we can do a search for action candles on the daily interval instead of the 2-minute interval as we looked at for day trades. So I'll just jump into the Stockscores website here, and we're going to pull up abnormal breaks. We'll do the US version today. We run this scan. It goes through every stock that trades on the US markets, and it identifies stocks that are making abnormal gains. So for example, ITRM, you can see the abnormal jump in price with the abnormal volume. That is an action candle. Well, what we want are the action candles that come from a decent pattern. Now, when it comes to downward trend line breaks like this, we want to at least see a rising bottom. And you see that there. You see the strong volume, the strong price action. This is pretty good. There will be some resistance here. And so the upside is a little bit limited. I like to have at least double the upside for the downside on the trade. And so in this case, it doesn't quite hit that. I would give that a 6 out of 10. And so the process is pretty simple. You do this every day. I do this every day, usually in the last half an hour of the trading day, in search of stocks behaving abnormally, surprising the market from low price volatility. And when I see that, I adjust the chart size so that I can see the pattern and determine whether it is what I really want. Here is another stock. This was CRON, which was our day trade of the week. And you can see that it broke its downward trend line and then broke higher from a rising bottom. That's a pretty good sign. Strong volume. It has a decent chance of moving higher up into this $11 zone. But that again is just not enough upside for me. It was okay as a day trade because we could move in a lot earlier in the day. But to catch it now at the end of the day, the reward for risk trade-off just doesn't make sense. So we go to the next page, and that's the process. Just cycle through charts, looking for those stocks, preferably breaking from sideways patterns through resistance from optimism. That's the formula that I teach. Now, what sideways trading is, what low volatility is something that we teach in the Stockscores courses, which you can learn more about at stockscores.com. For now, we won't get into that stuff. You can look it up on your own anytime. I think there's also some links in the description about the different courses that we offer. But for now, let's just focus on the tool. And the tool is giving us a number of stocks that have made abnormal price and abnormal volume gains. But so far, nothing that really has a great chart pattern. Now, you'll notice I was moving through those very quickly. With practice, anyone can do this. It just takes practice. So normally when you start out, you're going to look at those charts, each of them for 10, 15 seconds. Once you get good at it, 1 or 2 seconds, and you can see whether that pattern exists. Well, I hope that you've enjoyed this week's Market Minutes. If so, subscribe to the channel if you're not already subscribed. Click on the like button, leave a comment if you have some thoughts about where the markets are going. and most importantly, trade well.